Let's make no mistakes about it, folks. Some days are easier than others to cover the markets. But then you have daylight savings. I mean, that messes everybody up, right? How long does it take? Well, I'm just joking there. Folks, war escalation, a lot of impacts of that, a lot of sectors, a lot of stocks, economy. We'll talk about all that. We got some individual stock news, some good news. We have some stocks added to the S&P 500. We have Danny Kirsch at 835. Options expert over at Piper Sandler, who was calling for some volatility. Folks, we're rallying. It wasn't by the dip last night at 10 p.m. when people were thinking it's the end of the world. Let's figure it out on PreMarket Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, we're down only 70, handles 66.74. We had a dip under 6,600 last night. Let me share my charts, get them up here to the stage, and we will get on with it. We have the buck up 32 cents here, trying to take out last week's high. TLT, you like to see a better reaction than down 61 cents at 87.85. Well, in USO, we all know what that's doing. New all-time high here, up 11%, 1193, 121. GLD, man, not acting right. If you were looking for a big move up here, down 1%, 516 at 468.35. SLV going the same way, less on a percentage basis. That's down 34 cents at 75.60. Bitcoin futures, they're hanging in there, but hanging out near the low of the move. Down $540 is 67,755. These fine charts are brought to you by TradeStation, born to trade. Trade smarter, move faster, stay in control with a platform built for serious traders and for traders that want to be serious traders. We're going to bring Triple D onto the stage here after a little hiatus.
Yeah,
How you
fighting
doing there,
back
Mr.
here.
Dennis?
Fighting back here. The health is slowly getting better. It's had both sinus and ear infections, and they were pretty severe. Been on day 5 of the antibiotics, so I kind of breathe through my nose a little bit again. The throat is starting to clear up, starting to come around here, but it's been a battle. And now we're just in like trading. I was up till midnight trading last night because when you've got opportunities like this, you've got to be out there trading. Unbelievable moves over the weekend. Obviously, oil exploding over 30%. It was up at one point in time last night, Joel, which is, just a historic move. You just don't see that. So not surprisingly, the S&Ps were down more than 2%. Stocks were down across the board. So much weakness. I mean, but what happens, is, the oil, like that kind of a move. Like just think about this move. We're up like 70% in the last 6 days. This is not a sustainable move. It's not going to last up here. Eventually, there's going to be, a tox even, or there's going to be something to cool it off. But oil's not going to remain up here unless maybe the war goes on for years, and maybe it does. But I don't think that's going to be the case. So, but you were breaking it down here last night, Joel. You broke it down a nice outline of the war. Let's talk, the major implications and talk about oil because that's moving the most off of this.
Yeah, well, you all saw the chart with the USO here. That was hopping after hours. It's off. There was a little talk about releasing some strategic oil reserves. So who knows what that's going to happen. But first let's start with your big boys, right?
Sure.
Your CVXs, right? I
Uh-huh.
mean, it's moving. It's moving up. It's up $1.45. Exxon Mobil. I mean, that chart. I mean, they're moving, but
Not like last night.
no. What you see last night?
Well, and obviously Robinhood, you can get the overnight session interactive brokers. So for those who don't know, futures open at 6 p.m. Equities open for trade on Robinhood, interactive brokers, a couple other platforms at 8 p.m. And then they trade the overnight session till 4 a.m. when the regular exchanges open at 4 a.m. a lot of these stocks had already faded. So ExxonMobil, for example, was trading up about 7 points last night, 6 points. Chevron was up. I mean, these were historic moves. So when you see oil up 30%, you think maybe they could even go up more than that. But remember that day, ExxonMobil was up like 12%. I think traders really got burned and they weren't chasing them up to ridiculous levels last night. So just because oil goes up 30%, don't think your oil stock's going to go up 30%. These stocks, obviously are oil in the long term, not the short term here, where your oil futures are, well, this is short-term futures here we're talking. So, time frames are different. So oil stocks are never going to follow the USO perfectly here. USO is still trading up over 9% here this morning, but big moves here last night have indeed already been faded, which is good news for stocks because right now, the only thing that matters for stocks, AI will matter again, but right now, the only thing that matters for stocks is oil pricing, and it is perfectly inversely correlated. When I'm looking at my screen here this morning, I track about 150 S&P stocks. It is very much just oil stocks up and defense stocks up. Lockheed Martin, General Dynamics, NOC, LHX. Everything else is red, including staples, including drugs, including a lot of other things. So that's interesting in itself.
All right, yeah. Let's before we got to move on to the defense stocks next. But we talked about the big boys, right? You have your drillers, your Halliburton, up 35 cents, way off the high from that.
Way off the highs last night.
Yeah, SLB. What are they figuring? No one's going to be able to afford gas and oil, and they're not going to drill. The whole Venezuela impact, those stocks.
Everybody's just figuring the same thing, and it applies across the board to the oil stocks, is that this move isn't sustainable.
Okay.
If they thought it was sustainable, if they thought oil was going to stay up at elevated prices at 130, or people are saying maybe $200 a barrel, these are short term. It's not going to sustain up here. It's not going to be its long-term place to be. This isn't that's why if you're buying USO up here, I think you're completely on the wrong side of the trade. If you're buying USO last night, I don't know where it was trading. I think it was trading up over 130. You're chasing here so much, man. So late to the party here. And to be honest with you, if oil continues to explode up in price here, it puts pressure on this administration. And we're talking the potential taco trade. They're talking about it in social media. We're not making this up here because, people say, oh, don't get political here. They're talking about this in social media. Trump does not like the stock market going down. Trump does not like oil prices going up. He's already saying, this is temporary. This is temporary. He's trying to, back it down, trying to calm prices down. But prices really aren't calming down. And as oil continues to go up, it puts pressure on this administration to potentially start talking or make a deal. So, and we know Trump is all about the art of the deal. Bomb, 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 and I'm going to get a good deal. So I know people are saying this work could go on for years. The administration's saying now inside that it go up to September. I am willing to bet there's going to be talks sooner than later, and that's going to reverse a lot of these trades. So if you're selling all your stocks and you're buying oil because we're going into the war for the next 5 years here, I think you're on the wrong side of the trade. I do believe the taco trade will emerge here. And I kind of agree with that. One, I don't want to see anybody at war, so I hope that happens. I don't want to see people die. This is obviously, they were worried about the nukes, go in there. But the whole situation here now is you've started this. How do you get out of it? I think the administration is probably already trying to figure that out.
And things are not going to be so easy. But finally, and I just want to touch on the refiners. Valero's been on a tear here. That's trading up $3.50, but a couple red candles yesterday in MPC. So different sectors of the oil industry. Let's keep an eye on all of them. But holy man, let's go to defense stocks here, Dennis.
Let's do it.
I think on Friday, I heard he had a meeting with the defense contractors, and we are going to quadruple capacity.
1.5 trillion the budget could go to. So more money, and obviously this was all going to come from tariffs. And now the Supreme Court says, oh, you don't have tariff money, you have to pay it back. Trump's is going around other ways. We're still going to charge tariffs in other ways. Like we've said, he's going to find a workaround here. He's not the tariff man, is not going to give up tariffs. He's just not going to do it. And I don't think that they can figure out how to. He's one step ahead of them all the time. Yeah, okay, you got to pay back. Well, we'll just do it this way. So he's already figuring out how to lose this and move this. So I think tariffs are going to remain. Obviously, he's all about, once he changed the name from Department of Defense to Department of War, all of these stocks
Ding, ding.
were screaming buys. Lockheed Martin, NOC, General Dynamics. Lockheed Martin, NOC are the best two if you really want to go pure. And then the RTX is involved. Obviously, some of these drone plays are a little bit different. People had Palantir as the ultimate war stock. That was proven incorrectly when it became a software name. You can see today, even though all the defense stocks and the war stocks are up, Palantir is down here again. So we've kind of debunked that Palantir is the ultimate war stock. It just hasn't been the case. Although it's kind of picked it up a little bit lately. So a little bit of the war.
Week,
but there's a lot of other things
happening. Running Palantir. I know when you mentioned last night that was one of them. The only thing I was a little worried about, was this thing is basically gone from what, 125 to 162.
Yeah.
In like
a straight line.
In a heartbeat. So
all the software names. So I'm going to say, and people are saying, oh, Palantir is up because of the war. I'm going to go out on a limb here and say you are wrong. Palantir is actually up because of the IGV. And bring up the IGV chart and bring up the Palantir chart and look at them both. And they are in the last 2 months, and you know what I'm going to say? Identical. So if you're trading Palantir off the war and wondering, why is Palantir not up today? You are doing things wrong. It is not up because of the war in the last 3 weeks. It is up because the IGV has rallied substantially. Look at those two charts. Those two charts, folks, are identical. So that's what the people on Twitter that have no idea what they're talking about. Oh, Palantir, look at the war stock, look at the war stock. Well, it hasn't been a war stock. It wasn't even trading with the war stocks. It's been trading with the IGV. That is what it has been trading with. And if you look, all the software names, similar rallies here, ServiceNow, all of that. And we'll get to that in a second. But I just want to debunk that everybody has Palantir as this great war trade. And I'm sorry, folks, you guys are wrong. It is really not the case. It is a software name. And Palantir is up because the IGV has been rallying.
Dennis, I got the charts side by side, and then I do a face and a person, and I put your hair in there.
You got my hair in there. I have great hair right now. I'm telling you, it's just beautiful. When you've been sick for 2 weeks straight and just lying in bed, people say you got to get more rest. I am so tired of resting because Joel, every single person, get some rest, get some rest, get some rest. You lay in bed and then you get up and you're like not tired anymore, but you're not sleepy, but you're hurt. You're just trying to lay down more and you're trying to lay down more. It is exhausting resting, especially when you're like me and I want to do stuff. I want to go. I want to get, like into the markets. I want to trade. When you're just forced to lay down, that is a struggle for me, man. And that's why, I tried to do the show a couple days when you were gone. I'm like really fighting it. And I was like, I just don't feel good. I had to actually, I took the Friday off, and just get some rest. But, anyways, I'm on the way. I'm coming back here. So, I'm back.
I know it was like because with your trading too, you're just
I took
you were
2
trying
days
to
off
trade and you were sick.
If I don't
and you were
trade,
getting mad at the market. And you never get mad at the market. Yeah. You always learn lessons from the market. And you were like, man, and then I knew you were
the
really
market isn't doing the right things here.
Market's making me sick.
That's when okay, stop.
Okay.
Full stop. The market always does what it's supposed to do. It's like, you're not doing the right things. Might have something to do with, sinus / ear / half dead infections that I had. So, okay. No more about
let's
me.
Move on. Let's move on to the consumer. What about how is this we got short-term and long-term impacts on the consumer?
Yes. I mean, the number one thing that is under attack here right now are the airlines. These things have absolutely been killed, but there are multiple reasons to be concerned about airline stocks. Before the war started, we were talking negatively about the airlines because I'm like, if you're worried about your job and your white collar, you just might hold off on planning that trip. You might hold off on unnecessary travel. So I think that's the first thing, that starts to get hit. A thing like Royal Caribbean Cruise Lines didn't just start getting hit 5 days ago because of the war. Started actually getting hit 3 weeks ago because of AI. This is actually an anti-AI trade, RCL. So, and then you could go CCL, Similar story. It's been a mess. NCLH. Now you put a war on top of it, and people are like, well, I'm not traveling overseas. I know you recently canceled a trip here, Joel. I mean, this is going to be like people, when you're in war times, they stay put. They don't plan for more travel. And then the biggest issue here for the airlines is oil prices. I mean, this is their number one expense, like 40% of their expense. This is fuel. So, I mean, fuel exploding is definitely not good for the airlines. But remember, we just got done talking about the taco trade. So if Trump finds or starts talking or finds a deal because he can't handle oil prices going up this much, and all of a sudden you just get talks of talk. That's all you need is talks of talking. This oil price will tank and airlines will rally. So I do think airlines to a certain extent are a little bit oversold. Let's go to our good friend Frank Holmes and look
Wait, hold on. Wait a second. Mitch Olson here wants to know if we have uniforms on now.
Look at us. We're so fancy.
Our shirts are actually matching. And you know what, Mitch? I'll give you some information. We would have matching shirts if Dennis could figure out how to send the pre-market prep attire that I ordered, but the tariffs have been hard, so he hasn't been able to figure out. But no, we don't have uniforms on. Let's move on. These oil, excuse me,
because I felt so crappy, and it's trying to counter my ugliness here. So that's all I'm trying to do.
Okay. Boy,
let's look Delta, American Airlines. Like Delta's an international carrier, so it gets hit a little bit more than probably LUV, which is mostly domestic carrier. So that stuff matters to a certain extent. But overall, and we're looking at the chat here. Obviously, we always look at the chat. And Jack, for sure, that's what we were just saying, is the number one reason the airlines are tanking the last 6 days is fuel. Oil prices exploding higher here are really, really bad for the airlines. So they're all going to move down. And again, just like we said, if oil prices start to come in, and I think you may have actually seen the capitulatory top yesterday, like last night when we were up 30% one day. So when stocks are going down, there's talk, we need capitulation. We need to shake everybody out. We got upside capitulation last night when oil went up 30% over the weekend. That's called upside capitulation, folks. That's where everybody says, I can't take my shorts anymore. Get me out, or I have to be in oil. Just buy me at any price available. It's going to 200. That's called upside capitulation. That is likely the top. I think you might actually be safe and not see those tops maybe ever again. Now, again, that's a bold thing to say if all of a sudden escalation happens here, but I think there's a high probability. So I'm going to retract the statement of ever again because that could happen tomorrow. But I think there's a high probability that oil topped out last night. A high probability that oil. What do you think, Joel?
No, I mean, we're faders. I mean, when oil went to zero and it went negative, I mean, you feel
people
these extreme
minus $38 a barrel.
Yeah.
What? But
nobody negative. Remember that expiration?
Me and Jason Raznick were emptying our pools. We're like, yeah, when it went to minus $38 a barrel, we were pumping the water out, getting ready to hey, bring those contracts and we'll fill my pool. And then you realize how big those barrels are. I was like, you don't fit very many barrels in your pool anyway. So I was ready to go. Wasn't going to do great for any of the plumbing in there either. But either way, swimming in oil, my kids weren't going to be impressed in. But I tell you, man, the one that was doing, remember the raking it in?
Oh, yeah, yes. That's
NAT.
Have you been trading it?
Yeah, he was like, because the tankers were like, we'll buy oil at negative $38 a barrel. Hells yeah. Bring it in for us, baby. Let's go. And they interviewed on CNBC and they're like, it's going negative. You got all these tankers that can fill a negative oil price. And he says, we're raking it in.
On CNBC, folks.
Awesome.
Yeah.
That was the best interview that CNBC has ever done. I love that. I love that company just for that reason. But
I wonder if that guy's still around. But yeah, we forgot. Just going back to the oil discussion, we left out the tankers and the shippers.
Yeah.
But NAT comes to mind here. Finally, is we put a bow on this war impact, economic impact, economic data, inflation. Obviously, if oil stays up here, we're going to have some problems here with inflation. Economic data, you got to remember, before we had the escalation in war, you had the bad econ data and the unemployment yesterday. This week we got some numbers for inflation, CPI on Wednesday. We have CPI on Wednesday, GDP and PCE also coming this week. So we have economic data to come and analyze here. But once again, long and short-term impact on the consumer. I was looking at the XRT chart, Dennis, and I mean, when the markets get like this, a lot of the charts start to look the same.
They do. Once the VIX goes over like 25, you start to get all stocks just moving together. A stock is a stock is a stock. I've traded a lot of VIX, like not the VIX itself, but a lot of markets when VIX gets elevated here. Under 20, it's a stock pickers market. Under 15, it's a stock pickers market. Over 25, it's a market, meaning the market's going to impact everything more than anything else. And what you do in that case is you fade individual stock moves for a certain extent. Now, it's a certain ones, and we'll get to Novo in a second. I mean, when they're really good news, and obviously Hims and Novo have kissed and made up. We get to that in a second. But, other news, even for instance, let's just talk about this. We're going to move on to the VRT and the S&P ads from Friday night, because a lot of these stocks were rip-roaring and rallying on Friday night. Oh, hallelujah, amen. We get added to the S&P and VRT. So the 4 stocks added, VRT, which we predicted correctly in the STN room. I came in, even though being sick, I came into the room and I said, I'm very confident in VRT being added to the S&P. So I threw that little nugget out for that. Stock rallied $15 on that. So I don't know if any traders took it in our room, but if they did, congratulations. Stock is still up 7 points despite, obviously, all the rising tensions in the Middle East. Lumentum was another one, LITE. Coherent, COHR, has went red. Couldn't hold the gains here. SATS was the 4th one added. It is up 2%. But a lot of these have leaked away the Friday night gains because of the war. And that goes to the trade that we were just talking about. When you start getting, big moves, 5, 6, 7%, but the market overall is going down, the moves usually get faded in a tape where the VIX is elevated.
We did get a few of them. LIT, you'd look at stocks similar to that. There, you got to be happy with that up.
How high did that get on Friday night?
Let me look. I already do have the session up. Wow. Boom, Friday. Not too hot, not too bad. Looks like 590. Just had a spike there.
Off about $15 from the high. And how high did VRT hit? I saw it up 15, but maybe it went up more.
Oh, that one got a little more juicy. That got over 258. Let's call it 258 and a half.
About $17 it went.
Yeah.
I mean, you got in these markets, you got to take your profits when you've got them too. So you just talk, we've been in a contrarian market, and people keep talking relentlessly about buy the dip, 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 buy the dip. That's what I see on social media. I see only sell the rip from me. That's pretty much the only person I see posting sell the rip. Intern last night said in the STN room, we'll be selling the rip, because that's what's been working better than buy the dip. Just blindly shorting the rips has been killing it, man. Killing it. Now, is the trade overdone, some certain things. Sure, on software, eventually, it's starting to come back in certain pockets. But there's been so many rips that have just been, if you've just been blindly shorting them, you're making money. Blindly shorting good earnings. You're making money. Because why? Because bears are in control right now. You have to understand who's in control. It's not about whether we're in a bear market or a bull market. It's about who's in control temporarily here. Well, bears are in complete control. I mean, you got every stock in the S&P except oil stocks and defense stocks trading, lower right now. Even staples, drugs are trading down here. We lose that, FDA guy or whatever. And the XBI gets a big pop on Friday night off of that. We didn't even talk about that. Was it Prad or what's Prasad? What the heck? What's his name? The Vital. You know who I'm talking about here.
Yeah.
They got fired. I gotta look. I gotta get the name right here because this was Friday night's news, and flies under the radar. But I mean, you get a 2.5. Look at XBI. Bring up XBI from Friday night.
Yep,
It gets
got a
a
pop.
huge pop because on this news, Vinay Prasad, sorry, it's Prasad. Vinay Prasad out at the FDA. And that was the rumors. I don't know if we ever have confirmation of that, but XBI ripped huge on that. I mean, you're in a market where you just got to be selling rips. Now, that could change. Buy the dip is working over here overnight. If we get the taco trade, you're going to have the most violent rally you've seen in a long time. Is that going to happen? I don't know, but they're coming in relentlessly buying the dip. But this is actually, if you're coming here and saying, I want to buy the dip today, this isn't even a dip anymore, Joel, in the S&P. We're already off 1.5% from the overnight low. So you're actually technically buying the rip right now.
I know.
Yeah.
I know. You are buying the rip. I know. I mean, this is like no. I feel like the market's having a great day. I feel like it's having a great day so far. I mean, from off that low now, it's like, oh, did I miss the major dip down here? Do I need to start buying at 66.86? Well, folks, you were 100 handles lower last night, and I just wanted to show the S&P chart here because, the analysis that you could do when the markets are closed are a little bit different than you do when it's flying at you. But I'm like, well, here's this low from last week. Like, if we take that out, what do we have? We have air. We have air down to 6,600. And actually, this low here was 65.9875. We hadn't seen that level since late November. Now we're bouncing back. We got a little gap. I'll be interested to see if we can take out that pre-market high and start to work our way. We're really not that far from last week's low. Much rather had seen this move, like off the open, take out last week's low and then, get to play that way. But now you have to look at it as resistance. Let's just for 1 minute here, let's talk about the risk asset of risk assets. That's Bitcoin here, trading down slightly, still in a trading range. Thought you had a nice move up, but you pulled back.
Yeah, so obviously show continues to be brought to you by Hive Digital and our good friend Frank Holmes. Bitcoin, I said it the other day, I'm like, I kind of like the chart. I kind of like it because I feel like you've got some support here. You've got a level. I love looking at the IBIT. It's very liquid. It's easy to trade. So bring up the IBIT. Had the washout low. We're going to go back to February the 5th.
Yep.
$35.30. And then we just move it sideways here for a bit. But then we're trying to break out. Now the war has brought us back down here. I'd say as long as it's holding 35, you could take a shot here. So I'm going to say you could take a shot on Bitcoin here. I like that it's not even down today. I like that it's holding up. It's got good relative strength. So I think, again, gives you another shot. I think you can take a shot on Bitcoin here. I don't think the Bitcoin, I know we've been a Bitcoin winner here, and a lot of people are saying crypto is officially dead, and it's done. Bitcoin's going to go down forever, and it's over, and Michael Saylor is going to be bankrupt. I'm going to take the other side and say, I don't think so yet. I'm still hodling some Bitcoin. I think Bitcoin will have its day in the sun once again here. And I'll tell you, you've pulled back. You've been cut in half, basically, from the all-time high on Bitcoin. So, I mean, at this point in time, I think there's a decent opportunity that Bitcoin, has put in a little short-term bottom here. So let's see, if you want to take the trade, you're risking yourself $3, which is like 8-9% here. So it's not fantastic, but I don't know if you're going to get a shot back at that 35. I think buy the dip is going to emerge here in crypto. I think they might emerge here in Bitcoin. So I got this right calling it last week for the 1 or 2 days I came on the show, but try to do it again and say, I think in the 38s here, I kind of like the IBIT.
Okay, yeah, thank you to Frank Holmes in the Hive Digital. Trying to mount a rally along with Bitcoin. All right, moving on our merry way here. Dennis, we got some individual stock news. Let's talk about stocks moving higher.
Wow.
And Hims and Novo, did they kiss and make up?
They did, Joel. This was from Friday night. So, and Novo comes out, announced they can sell obesity drugs together. So these guys are back together here again. Hims, which obviously fell substantially when the fall apart with Novo originally happened here, is getting all of those losses back and maybe even more here. So your Hims traders are saying, we're back. We're so back, because everybody on my social media account when this was 70 said it was going to $500 a share. It's down to 15, but they hodl. They don't sell. They're like, it's still going to 500. I'll just buy more down here and I'll make more money. I'm going to say I don't believe Hims is ever going to $500 a share, but you're never supposed to say never. But it's a nice pop. It's a nice 52% pop for Hims. It's coming back. It's relentlessly higher. It's great news for them. They're going to be able to sell, and Novo is trading up slightly on this as well, but it's not as big a deal for them. It's a huge deal for Hims. With that being said, we are in a bear market right now. I don't care we're not down 20%. I don't care about any of that. I'm telling you, the bears are in control. I mean, maybe we're in a bull market tomorrow. Who knows? I go back and forth. But right now, bears are still in control, even though we've rallied here. When stocks rally 53% in bear markets, and Hims is definitely in its own bear market, what do? You ring the register. You say, thank you very much. I just made 50% of my money in one day. Thank you. Take the gift. That's what this is right now. It's a gift. Do I know where Hims is going long term? No, I have no idea what's going long term. But I tell you, as a trader in this market, when your stock pops 50%, you're not ringing the register. You're asking for a lot of your gain to get taken away from you.
Yeah, you do have some short interest in that. We're climbing.
You know what? The short interest, I'm sorry. This is the stupidest. People buy stocks because they have a high short interest. They're like, oh, eventually those shorts are going to. This isn't 2020 with GameStop anymore, folks. Do you want to know why stocks have short interest, high short interest? Because they're crappy stocks. That's why. And do you want to know most stocks that have high short interest have that for a reason? Usually those shorts are right. They'll point out the one or two opportunities, that's fine. But if your whole investment thesis is to buy stocks with high short interest, you've been crushed in the last 2 months, and you deserve to be crushed. That is the stupidest investing strategy of all time. There are times to come into the markets for short squeezes. There are times to be like when everything's squeezing as trades, as traders. But if you're investing off of short interest, you are doing everything wrong, and you need to reevaluate your entire trading career.
Okay, man. Triple D, I'm going to upgrade you.
I've been gone for a long time, so I just want to rant on rant.
I know. Well,
I hate investing on short interest. When somebody says, I have this investment thesis and it has a high short interest, that's their first argument, I immediately don't even consider the stock. Consider the stock. What are they doing that's doing good? What are the fundamental reasons here? I try to envision it with AI. We probably need more energy. It's not a no-brainer. Energy. It's not about short interest. I don't buy CEG because it has a high short interest. I don't even have a clue what the short interest is on CEG. I couldn't care less. Your investing should have nothing to do with short interest. Trading is a different story. There are trading opportunities there. But stop investing on short interest. If you learned anything from this show, stop right now and write this down. Get your tape out. Do it. Get out your sticky pad. Write down. Stop investing on short interest. This is a way for you to lose a lot of money in the stock market. These are crappy stocks. Stop investing in them. Trade them as you want. You can trade anything. But investing because it has a high short interest is the dumbest reason to invest in a company that exists. That's the rant.
That's a rant.
Cut that, Michael.
Whoo! Boy, we're getting back to rant central here. That's good. Okay. All right. We got a special guest here in the background, and we are going to bring him on in just one moment. Michael. All right, Daddy, I got to get it over with. The crowd won't be happy. Big Ten champs, Michigan basketball. Dennis, you were texting me. I was at the Michigan State game last night, and I had to get investment advice, okay? But we got the tournament. We got a triple bye, my favorite team of all time. Will I see you in Indy when we make it?
Yeah, I think so. I think so. I booked a flight to Chicago. What is it, like a 2-hour drive?
Yes. Okay, so Danny, I know I have this memory like no one else, and you were on about a month and a half ago. Get your arm out there, pat your back. You were talking about increased volatility.
Yeah, there it is. Yeah. Thank you for reminding me. I needed to hear that this morning because my PA is blowing up. So it's nice. It's nice to at least I got that right. Yeah. I'd say right for the wrong reasons, but regardless, we were kind of talking about the fact that you didn't need the trap was set for a pop higher in volatility because people were very short heading into this, short VIX futures, probably too long the market, and that was just it was just like a really bad setup. And for what it's worth, the S&P really is a down month, but the VIX has exploded. And again, we were in a circumstance, I'd say it's less so now, where it didn't take much for the VIX to go up a lot. Obviously, a war in the Middle East is more than enough. But beyond that, there's a lot of other
a lot of
scary
other
things
things to
happening in the
talk
market
about.
right now.
So with that position that you have, I mean, too bad you couldn't get out in the middle of last night, right? With all that, but the characteristics of the VIX is like get those spikes, and you got to try and get out because then it's just like any kind of rally, like the rally that we're having today, it's just going to squash it. Do you pick specific targets and hope those targets get hit during the day, or is this something you adjust?
So I might need to log off and log in. For whatever reason, the sound just went out.
Okay.
We'll get Danny back here in a second.
Okay.
A few technical difficulties. He's going to come right back here. He was working and then he'll be back. So he'll figure that out.
Okay. Right. Well, we were just talking about the VIX and all right, let's see if we got Danny back here. And
Yeah. So,
how you doing?
Sorry about that. Good. Sorry about that. The sound just went off. I don't know what happened there.
I asked you about the spikes and targets in VIX and when to exit, or is this something you keep on as a hedge and you let it roll off the board?
We're starting to unwind. I think now if you're looking to hedge and you haven't yet and you own VIX calls, like this VIX is over 30. It's like this is where you start monetizing.
Yeah.
You just look to alternatives. It's just like you don't buy VIX calls when it's over 30. Like I wouldn't say today is the day to buy it could go higher, but there's just better bang for your buck. We're suggesting to clients is like the US equities are very strong, but over the last week, and again, this is what drives the VIX higher, that drives the VIX to outperform, is there's been a ton of hedging. People have been buying puts the last few days. They bought them on Friday. So S&P skew, the difference between an out-of-the-money put cost relative to call is very high. It all says the same thing. People are very, very well hedged. So from here, I don't think volatility will outperform. And again, when we say volatility outperform, typically, let's say the S&P is down 1%, the VIX should be up a point or two. The last week, it's going up 5 points. That's the outperforming. So you're better off owning a VIX call than an S&P. But that's not the case anymore. We're suggesting clients, like if you need to hedge, you should be looking outside the US. There's an ETF called EFA, that's Developed Markets ex-US. That's where you should be buying puts. You want to find the countries that are more exposed to oil, and the US just isn't there. And the US is selling off. Don't get me wrong. You're fine buying S&P or Russell puts or something like that. But I think there's better bang for your buck looking outside the US, Asia, and Europe. And there are ETFs that track this as well, US listed ETFs.
All right, let's move to another worry in the market, and that would be credit spreads. And they've been widening. There's a lot of different factors going there, and I will get your chart up here with the credit spreads on here. Talk to us about Blue Owl, what direct lenders are doing, and what the credit traders are doing out there.
Yeah, so we've seen this large pickup. So you've had Blue Owl that had exposure to this collapsed UK lender. This MFS, it's another, this is like the European mortgage lender that's blowing up. BlackRock had to, is trying to stem withdrawals. It's all like the same story. There's a lot of issues on the private credit side. That's what this is showing. So a lot of these stocks have gotten killed. KKR, Blue Owl, BlackRock, Apollo, they're all selling off because credit spreads are widening, and there is like this liquidity mismatch as well. A lot of the investors in these stocks and ETFs are retail investors, and the liquidity profile is very poor. Now, a lot of these credits might end up being okay, but when there's any sort of cracks, there's a flight to the exit. So these have been underperforming. So for us, we've seen clients buy puts on BKLN. That's like a loan ETF, HYG, which is been a relative outperformer. And I think another area to look is KIE. That's an insurance ETF. So I guess a lot of insurance companies will use the premiums they collect to invest in private credit. And a lot of these insurance companies have been outperformers. We'd expect that to not be the case on a go-forward basis as people start to realize that some of the biggest insurance companies in the world, even like a MetLife, like they're using these premiums, investing in higher yielding assets. That would be private credit as part of that, and would expect more pain there. So, in lieu of like chasing these stocks lower that have already gotten killed, and that's what this chart is showing. Again, we're looking, well, what's the next leg to fall? And we think KIE. So a lot of these insurance names would be at risk of higher credit spreads.
All right. That's a good illustration. So you're not getting the interest in buying the dip yet, and still looking for more pain in the credit markets.
I'd rather find the next thing that's going to roll over as opposed to trying to buy the. I mean, it's. I don't know what gets it to stop in the near term, so I would just avoid it. It's not like credit spreads are super wide yet, and you haven't heard of any really large defaults. So again, it's kind of a. I wouldn't be buying the dip. I wouldn't be necessarily chasing them lower, but I'd find the next thing that I think will sell off, and I think that's insurance companies.
All right, we gotta go to the crude market here. The biggest impact so far here, right, has been on the oil stocks, the impact on the consumer here. We are at elevated levels. You got a note here. WTI rose 36%. That was last week. The biggest weekly gain as Bloomberg data goes back to. I would look for just a continuation, a taco trade. I mean, ring the register. It just chases all the way to $200 a barrel.
I think if you're looking to play energy at this point, if you want to play oil higher, probably go to nat gas. There's a name, or even liquefied natural gas, a name like LNG, a name like VG, Venture Global, that have like Venture Global actually is like pretty correlated to spot liquefied natural gas, and I'd say you can ride that stock if it doubles from here, it unwind. But I'd say like chasing energy from here is a little scary, because it's like, if anything, if there's any sort of like tone down of rhetoric or tone down on the war, then this comes off massively. I don't think our view is it'll be in a few weeks before that happens, if not months. But you never know. I mean, it's Trump. It's not quite. It's obviously there's a lot more risk than around Liberation Day, but it has that sort of same feeling of, well, this could turn around really quickly if there's some sort of
talks. Talks, like talks of talks. I mean,
right.
Oil goes up 30% last night. 30. I'm like, this move is like, this feels like upside capitulation to me. Like, I mean, you're talking oil, after, you put out and then you go up another 30% here. I mean, I feel like everybody that wanted to be in got in last night. Now they're like, oh, I'm down. Why am I down here? Even though oil's still up 10% here today. Danny, I mean, just talk about this extreme move here. Is this like, again, we get it, it's a war. Oil obviously is all about supply and demand. If supply is taken off the board here, prices are going to go higher. But I mean, you're talking about up 60-70% a week here. I mean, this is a little bit overdone, is it not?
I think it's sort of, you kind of understand how dependent a lot of these countries are on importing. And the U.S. is in a good spot where we are a net exporter of petroleum products, but I think Europe and Asia, they're willing to pay whatever the cost is to get oil, and it's not going through the Strait of Hormuz right now. And again, I don't see. I wouldn't necessarily be fading it yet. If you do want to fade the price of oil, the way that we've been suggesting doing it is, so USO is the ETF that tracks oil.
Yes.
What you'd want to do is sell like a put that expires this week or next week, and then just buy a longer dated put. And the reason you do that trade is, like, I think oil isn't going to crash from here. I don't think it's going to crash this week. But the idea is your RAC's risk is the premium you spend. You pick the same strike, and short dated options, not surprising. You have an ETF that's or oil's rallied 25% in the last 2 days, are very expensive, short dated. So you end up like getting a lot of the cost back. So that's like the type of structure you set up where, let's say oil crashes lower tomorrow, you're only going to lose your premium. So for instance, USO, I think, is around $100 now, or USO right now is 120. Yeah, 122. Wow. So you sell like 100 put that expires on Friday, and you buy 100 put that expires 2 Fridays from now. And by selling that Friday put, you're getting, a third or half your premium. And then you have the longer dated put to play for any sort of oil crash in the next few weeks. And that could easily happen if you get any sort of positive news, or the fighting dies down, or there's, quote unquote, declaring victory. And then this chart, it's from our strategist, Michael Cantor's, and his view is that the entire market is one variable. If oil's up, market down. If oil's down, market up. And we tend to agree, and everything's super correlated. So underneath that is like the put spreads that we've been suggesting clients use to hedge. There is S&P and Russell in there. My personal favorite is this EFA, and we like March put spreads. EFA is developed markets ex-US. These are the countries that are importing oil. These are the countries most at risk of higher oil, and this ETF is actually up on the year. This has been outperforming the last like 8 months because there's been so much money flowing into Europe specifically, and we think a lot of this money gets sucked out. Every day that oil stays elevated, we think Europe's in trouble, and Europe is the most negatively impacted by higher oil prices amongst developed markets. So we'd be shorting there relative to anywhere else. If you feel like you don't have, if you feel like you're too long in the market, buy puts on EFA.
I love this. What you were just discussing there, and this next graphic that we have up here. We like to identify catalysts, right, and variables, and obviously the oil shock here, the Middle East tensions. That's your number one story. And here,
sorry, one sec. I'm gonna have to read. I don't know why this keeps happening. I'm gonna have to read. I'm gonna be back.
Okay. All right. Well, folks, he is illustrated here very nicely the correlations that he was talking about here with the ETFs and the 30-day correlation to the USO. And Danny is popping back on.
Yeah, sorry. I don't know
Don't
why
worry
that.
about it. Don't worry about it. So I was just showing this chart here with the 30-day correlation. Just what you said, EFA, the EEM, those are the ones, and then of course the consumer, Japan. So is it, where are we at? Are we in any one, any two, any three, any four?
Let's say four.
Where are we at in the stage of this trade?
3 or 4. I mean, I don't think you want to be long Europe anyway, let alone what's going on. You already see credit blowing up. So it's like if you have higher oil prices on top of this credit blow up, I think Europe's in trouble. So again, it's like this is just a cherry on top, and I think would much rather be short Europe than the U.S. from here, and much more negatively correlated to oil. And the chart underneath just basically shows people have been getting long. So that white line is EFA shares outstanding. So that's just telling you people are getting longer and longer Europe and have been. This is, again, chasing past performance. Europe had been an outperformer, and that's the top. It's EFA relative to S&P. We think that that trade is over. And near term would be looking at puts there. And then just to end on a positive note, this is the last.
Let's get positive.
The last chart. So this is just the difference in S&P skew. So basically says the difference in volatility of a out of the money put relative to an out of the money call. So when puts are very expensive relative to calls, people are very well hedged. So what this is telling me, and what the way I would read this chart at the very bottom is saying that people are willing to overpay for puts relative to calls. So if you do get positive news, these puts will get sold rapidly and to an extreme extent. Again, this is something we saw around Liberation Day, where puts were monetized at a very fast pace, and that caused a huge rip higher. So the trap is set. You need good news, but once there is good news, the market's going to be up multiple percent in a day, and we're going to recover very, very fast. But you need the good news first. But that's also why this chart is also why I don't love owning S&P puts and would rather go to Europe.
Okay.
People are hedged in the U.S. That is what this is telling you.
Okay. I love the way you. I mean, and it's been a huge outperformance. The other thing that's been leading to that outperformance has been, the weak dollar, and now you have the dollar rallying under this. So it's kind of like a double whammy there for the overseas stocks. Before we let you go, Danny, just gotta talk levels here. And for the S&P, and I think picking out the low from today correlated with the low that we had late last year, and then you kind of think about like last April's low, like where we came from, where we just under 5,000 in the S&P. Now, I'm not calling for under 5,000 in the S&P. I think it could be a really hard time to get back near 7,000 in the S&P here. And this has always been like a stair-step down market. And there's a point, though, where like the institutions come in and they say, okay, enough is enough. I mean, one low today, 64, 584.50. Certainly hope that holds up today. What do you think? I mean, are they waiting for the news? Are they waiting for the good news to come in before they step in? Or do you think there's identifiable levels in this market?
It's good news. I don't think it's levels. I think it's news. And again, our firm view, unfortunately, it's the next few weeks. There's going to be no stoppage, so it's going to get worse from here. But the positive side is when there is news, which hopefully is in the next few weeks, that's positive. We're going to rip, and we're going to be back to new highs very, very quickly. The issue is getting there. But I'm not a big level guy. I'm just looking at a chart of the S&P. It looks like 6,500. 6,500 looks to me like a pretty important level.
Okay. Now, I mean, sometimes, charts are charts, but as we've seen in this market, it's the news and it's the news cycle that affects this market the most. So, Danny, really, really enjoy having you on here. Oh, one more thing I want to sneak it in real quick. Because people are looking to buy, right? This is the character of the market, right? And people are always looking for the bargains.
You want to know what to buy? There's something I like, SHLD.
Okay, let's take a look. Okay.
It's not very creative. It's not very creative, but I think it'll keep working. It's the defense ETF.
Okay. All right. Okay. So I guess I can't get you into the IGV or, picking a bottom in software.
No. You can buy it.
He just said 1.5 trillion going here. That's probably not the bad place to be if he's going to.
I don't know. Maybe it's too obvious, but I keep reading about how we need to restock. So even when this ends, they got to restock. And Europe wants to spend more in defense. U.S. needs to spend more in defense. They're talking about adding an amendment to the most recent budget to put more money into defense. I don't know. Look at a chart since this thing started. I think 3 years.
Yeah, I'm not going to argue with you.
It just goes up. That's what you want.
I mean,
Palantir, I'm just looking at under the hood. Palantir, RTX, NOC, General Dynamics, LMT. That's your top 5 holdings.
Sure.
Palantir, which has had software problems. Stock's been doing pretty good.
Yeah, I mean, you could also. I mean, people. I know software acted well last week. I think that's a positioning trade where people got taken out of the trades that were working versus not working. But sure, there's other places. I'm sure there's great places to buy the dip. Again, I think when the market rallies, everything's going to go up. So I don't think it really matters. This, I think, will work regardless. I mean, maybe you get a sell off when this ends, but long term, I think this is. I'd rather just stay long this.
Shield.
Yeah, or just buy the highs. Doesn't matter.
Buy the highs or buy the. All right, Danny. Always great having you on. Don't know if I'm going to have you on before I see you in Indy. But as I said, head of option strategy over there at Piper Sandler, giving us a great look at the markets. Thanks, Danny. We'll be down up again soon.
Thank you.
Okay, Dennis, we're going to do it just because it's part of our show. Rating the ratings. And you know what? The analysts can't take time off for the war, right?
They do. Because when you have, so analysts is all about stock picking. It's all about we like this company. They know when the VIX gets elevated, stock picking doesn't matter at all. Stocks just all move together. A stock is a stock is a stock. With the VIX up 30, individual stock picking doesn't matter. The analysts know that too. And they hold their ratings back. So we're reaching why is there no good ratings this morning? You want to go do an upgrade with all this geopolitical uncertainty right now? You've got that note sitting on your desk, ready to do your upgrade on your Meta, your Apple, or something like that. And you're you hold that note until geopolitical risk comes down. So there's no real, there's a few analyst ratings here. Dow Chemical. Oh, Scotia Bank's upgrading Verizon. I mean, nothing's exciting there. But for the most part, analysts just keep quiet during this period here. So this segment here, which we obviously do every day, is a great segment. It just doesn't work as well. And when the VIX is elevated over 30. One that I do notice here is Rothschild, not a huge analyst. It's going to be a big mover here, but they are actually upgrading GE Vernova, GEV to buy. There's been a recent dip on GEV. Hey, I'm all about the energy trade. GE Vernova picks and shovels here. I don't mind this trade at all. So they're buying the dip. Stock's trading down 9 points. Nobody cares about a rating when the VIX is over 30. They just care it's a stock, and I'm selling stocks today. But I think you still got to be looking at major themes because the war will pass. We will eventually get some talks. We'll eventually get some de-escalation. It will pass as well. I don't know when. Nobody has this exact timeline here, but will pass. AI is not going away. So I'm still going to stick with my AI investing themes. Nothing has changed. Number one is energy. GE Vernova definitely fits in that club. Number two, hardware. Talked about that. The hardware stocks, look at Marvell last week. You see good moves. Hardware still versus software. Even though software has had a rally here, there's still some potential disruption there. So I still like hardware here long term. I talked about the necessities trade. I think I'm early on that, but I do think eventually there is, if we get pullbacks, significant pullbacks in the staples, I think those are buys. And I've talked about bonds. Bonds have not reacted well to this war. The bonds trade, the TLT has not been doing much. I don't love the way that it's been reacting. I would have thought TLT would rally in this environment. Hasn't been the case. Hot CPI, probably, maybe, that's an issue here, obviously. That's holding it back. But lots to think about here with TLT. But, that's where I'm at.
What about a good old defense of a stock, right? And you get the bad news, right, on Western Alliance Bancorp, and they absolutely slaughter it. But they could end up with a green candle on the day, and you get an upgrade to from underweight to equal weight at Wells Fargo here.
Oh,
Everything okay? Not up much. A lot of
No.
people stuck in this one.
These are gutsy calls. The regional banks are not the place to be here right now. There's problems here at the regionals. KRE is a mess here. I think there is a place and going to be a time to buy banks again. Yes, they've pulled back substantially, and yes, some of the valuations are reasonable here. I it was part of me. I wanted to be. Remember, I blew my acronym up, 2 weeks ago here because I'm like, I count on war trades, this AI stuff happening here. I don't know what AI does to some of these, businesses inside the bank. Here's the trouble: is are you always going to need a bank to store your money? Probably. Are you going to need all their wealth services? You can need all this, I don't know. I think at a certain point in time, AI is going to do a lot of that for you too. So, some of these investment banks and stuff, and obviously you've got to look at, what's in some of these banks, what's, their businesses are, the core businesses lending, because that's still important. But are there core businesses like wealth management? I think that gets disrupted. So again, I think AI is going to disrupt the financial industry, and it's a little bit, scary to invest there right now.
Yeah, you had the initial shock came in Charles Schwab, and that was back in early February, and it's really never recovered.
I'm not sure it's over.
Yep.
I'm not sure this is over. So when you get a boom, a shock, and a consolidation period, it's not often just comes all the way back. I think I'd more on a Charles Schwab be a seller than a buyer here. And, I know the valuation is reasonable on some of these names. I think what you really got to do is break it down. I think there'll be some winners in the banks. I think there'll be some winners in the brokerages. But I think you got to be very careful with what you're investing in. Stock companies that are very much focused and have a huge portion of the revenue from wealth management, I'd stay away from those stocks.
All right. Do we want to? I want to mention this Dow one. In the only reason, Dennis, you weren't on Friday.
It gets an upgrade every day.
That's why.
This is 4 upgrades in a row, isn't it?
Is it 4?
I think so. We've got to go look at the history here. But
yeah.
I think Dow. Let's go look just for fun here. I'll just try to bring it up here. Just bear with
folks.
me.
And that one thing when we talk about the ratings, I mean, we look at the individual ratings as well, but. Dennis and I, we came up with this a while ago. Analysts chase price, right? But sometimes analysts just gang up on a stock too, or gang up in a positive way.
They do.
Yeah. Yep.
And we've seen Dow, so it just feels like it gets upgraded every day. So I'm just looking through, the history of the upgrades here. Obviously, this morning we had an upgrade. JP Morgan, who upgraded this morning? RBC upgraded this morning. So Friday, JP Morgan upgraded the stock. Thursday, Bank of Montreal upgraded the stock.
Really?
Wednesday, KeyBank upgraded the stock. 4 in a row from 4 different brokers. You don't often see that. So Key, then BMO, then JP Morgan, and this morning we get Royal Bank upgrading the stock.
Holy.
That's weird. 4 days in a row. It's not even a company that's got news or something. Just like everybody's like, oh, I want to be part of this, want to be part of this. They're really bullish Dow Chemical. I mean, stock's been doing great. I mean, it's a value stock. It's got an okay dividend, 4.19%. Maybe they like that. Chemicals. It's been beat up, so they think this is the comeback story here. But man, the analysts are all over this. You don't often see upgrades 4 days in a row.
Earnings tonight, not much. HPE, Casey General Stores, and
Vail will be interesting. MTN. I don't know if it was a great season. I think, like obviously we had Tim, maybe a little short in season even there too, was talking about, just the ski conditions being really crappy last week. Like he says it's been crappy for a couple of weeks. I don't know if that shows up in these results is the problem. So it's about guidance. So, obviously we're looking back to the end of December, where conditions were a lot better. I don't think it's been a great spring for Vail. So do they say that or do they hold it? But I don't think it's been a great season for them.
No,
maybe I'm wrong.
And I've talked to a couple people that have like been out there, and they're like expensive, like the tickets.
Oh, so much money, Joel.
Yeah,
so expensive.
But okay, so we're gonna wrap things up today here. Pre-market prep, the Brentster out there in Lost Wages. If you're listening, I know you're not. We miss you, and have a safe.
We do have some breaking news. COHR, which obviously got added to the S&P as well, was trading down, has just went higher. They are launching 700 MW uncooled micro pump lasers for optical networks. Laser trade for COHR. Bring up the chart. You'll see the recent pop. If you do the pre-market chart, you'll see it just popped up.
I do. I have it on the pre-market chart there, Dennis. What?
237 right now.
Yeah. Not a ton of volume, though. Less than a little over 1,000 shares.
Yeah, maybe it's kind of been coming up and slowly coming up here. So, okay.
Okay, we missed Live Nation. We got some other stuff to cover.
Yeah, Live Nations. We'll talk about that on StockTraderNetwork.com.
Okay, folks, thanks for joining us here on this Monday. You heard it from me first, man. I think we're having a pretty good day as we're 90 handles off the pre-market low. Let's hope that holds. All right, folks, back with you again tomorrow morning. Thanks for joining us on Pre-Market